This is Holly Ross. Just wanted to confirm that you all can hear me. If you could let me know, maybe just a couple people could. Perfect. Okay. Thank you. Okay, I think we'll go ahead and get started because we definitely have a packed agenda for today. So today we have some more advanced topics that we wanted to talk through with you. So we're going to spend maybe about 30 minutes on additional Worktag usage. So we're going to get into some additional rules and drivers that happen depending on kind of some of the combinations of Worktags and how those work together. This is, again, more advanced and something we would expect for this group to understand and know how to do when needed, certainly probably beyond the scope of a lot of our end users. So Tiffany Mayers is going to walk us through some of the specifics around that area. And then we'll spend about an hour on release from duty and the salary recovery journal process. And we'll have Christina walking us through that process. So just as before, this session is being recorded, so folks can come back and review and look at this later. And if you have questions as we go, feel free to put those in the chat and or the Q&A, and we will try to do those as much as we can. If we get a lot, we may have to do some follow-up afterwards. So I think we can go ahead and move into the first item if Tiffany wants to start out there.
Yep, great, thanks Holly. So we're going to really look into some additional account posting rules. Many of you were probably in a journal entry training where they discuss the ledger account usage rules report that really looks at those baseline spend category and revenue category account posting rules. And we've gotten a lot of questions around other ledger accounts, whether that's payroll ledger accounts or how does cost of sales or how do things get to the capital ledger accounts. So I wanted to spend some time going around over those really specific rules that override what you might see when you're just looking at spend and revenue account posting rules. So when you're looking at that report, it's really important to know that each business process might have account posting rules that they wrote that override the spend and revenue rules. So for instance, payroll ledger accounts, you typically don't see a lot of those on that report, and it's because those rules assign ledger accounts based on HR, payroll, and finance attributes, and the rule is actually written on the payroll side. So here we've provided a list of dimensions that are used in this evaluation process to determine what ledger account would be used on the transaction. So a lot of the payroll ledger accounts you might see a few just depending on different attributes that we selected, but most of them you're going to be able to see on this ledger account and spend category crosswalk that Christina has provided for reference. And then she also spends some time talking about this in her payroll expense and commitment training. So this is, again, why you do not see those payroll ledger accounts listed on our ledger account usage rules report when you're just selecting the spend rule in the prompts. Next slide, Christina. So now we're going to look at assets, specifically looking at capital. So since OSU has turned on multi-book settlement, any spend category that is marked as a trackable spend category will use the business asset multi-book settlement account posting rules. And these will not use the baseline spend category account posting rules. So for example, during the requisition process, if you add the expenditure treatment Worktag value of ET 102 capital, it will drive a capital ledger account. If a trackable spend category is selected and the amount is over $5,000, you will get a custom validation warning to let you know that ET 102 should be selected and put on the transaction. This warning will not show for anything that is under $5,000. And if ET 102 is not selected on the requisition that uses a trackable spend category, it is going to drive it to a non-capital ledger account. And how you can determine whether a spend category is actually trackable or not, if you pull the spend category FDM values report, and that was shown in an FDM training session, there is a column in there where you can tell if a spend category is trackable. So again, anytime a spend category is trackable, it is not going to use the spend rule. It is actually going to use the rule that is written in the business asset multi-book settlement account posting rule. So if you want to drive it to a capital ledger account, you definitely want to make sure that ET 102 gets put on there. So to drive a transaction to a cost of sales ledger account, you must add an expenditure treatment Worktag value of ET 101 cost of sales. Approved cost of sales for university overhead is calculated on cost of sales ledger account plus spend categories that roll into the cost of sales, fuels and fuel additives, supplies and services, spend category hierarchies. There are a few exceptions within there, but most of the categories that you see in those hierarchies are included. And then this is then subtracted from how much the unit earned. So you will need to know, the user needs to know to put that ET 101 on the requisition because there is no custom validation that's going to remind them to do so. This cost of sales is discussed in the using Workday in your earnings unit training. So again, your spend category is not going to say cost of sales. You're going to have your spend category, but the ET 101 truly determines whether that hits the cost of sales ledger account or just the regular expense account. And then for internal service delivery process, the same revenue categories are used for internal and external revenue, but the transaction will post to an internal revenue ledger account when the internal service delivery is posted. And this is covered in the Workday for Internal Service Delivery training. And one thing I forgot to mention, you probably see on the slide that green highlighted for e-learning. We will be putting the link into that. So when you guys get this deck, that will be populated for reference. All of these things that I'm going through are discussed in business process trainings, but we thought it was good to kind of pull it out in one place because we do get a lot of questions on this. And Holly, feel free to stop me if there's any questions that come through the chat.
Okay, no problem. I'm watching them.
Okay. So next, we're going to look at inventory. So how do we determine whether something's going to post to an inventory account versus the regular expense account? And that's truly determined by a rule that looks at cost center plus the accounting treatment that is set at the spend category. So for example, if the accounting treatment of the spend category being used is inventory, and a cost center was the business and finance general warehouse, then it's going to post to the ledger account of general stores inventory. So it's truly a combination of both the cost center and the spend category that's being used.
Hey, Tiffany, real quick, we did get a question. Will blanket POs already in place with a cost of sale account convert to Workday with the ET 101? Do we need to run a report to validate these converted correctly after go live?
No, they actually do get ET 101 automatically put on them. It's an extra step in the conversion process, and we have confirmed. So all of the cost of sales ledger accounts in PeopleSoft will automatically have the ET 101 put on them for the purchase orders. Okay, next, this is a slide if you've been through the payroll training, you probably have seen. So Christina was nice to share this with us, but this is really talks about there are specific work tags, and this example is for OSP grants, that there's a certain way that you want to enter work tags on the transaction in order to try to avoid custom validations that might pop up. So I'm kind of the costing company, that's not going to be on most of your financial operational transactions, but if we had an OSP grant that we were going to use, you would want to enter the cost center, then any programs you might have, and then the grant. Then you could do fund and additional work tags. It's really important here because of function that if you enter the grant first, and then you were to enter the cost center, you're going to get a critical custom validation error that doesn't let you move forward because the function on the grant should win on the transaction. So if you were to enter things out of order, you will get a message, and it's going to tell you, it's going to be very clear. It's going to tell you what function now that you have to put on the transaction to get it to go through. But to avoid those, anytime you're using an OSP grant, you're going to want to make sure you enter the cost center first, and then the grant should follow that. And we don't have any cost centers defaulting on OSP grants. And I know, depending on what unit you guys are closest to, whether you related, cost centers and funds on gifts and those types of things. So it really could vary by unit. But if I was doing a transaction that had a gift on it, and I know my gift has my cost center and my fund and my balancing unit, and it actually will have your function too. You could just enter the gift first, and it would pull all that information in for you. But definitely, if you guys enter left to right, you can do that. If there's any errors from a custom validation standpoint, they will pop up and help you through. And the more you guys are in the system and get used to how related work tags work, you definitely will figure out, oh, I could have saved myself 4 clicks by, maybe just entering the gift first. But definitely OSP grants is a big one that we see, even as we've been practicing testing. If you do enter a cost center after you enter the OSP grant, the function might be incorrect and you could get an error. So again, this is just kind of for reference, but depending on your unit, and if, I think of Wexner Center for the Arts that actually has activities and events that have all their work tags they need on it, for them, it might make sense to enter that value first to pull everything along. So next, we're going to look at, spend categories. So we know spend categories drive ledger accounts. But there are also things that drive spend categories. So one of those examples is our expenses side. So expense items tied to spend categories, and then spend categories are tied to ledger accounts. So expense items are what we use on spend authorizations and expense reports. So an expense item you might select is alcohol, and that expense item is tied to a spend category of beverages, alcoholic. And then that spend category is also tied to a ledger account of other expenses. So when you select the expense item, that is how the ledger account is determined. So again, in the expenses side for your spend authorizations, expense reports, you're going to select expense items, and that's what in turn drives the ledger account. Robin has provided the expense item and spend category reference guide, so you guys will have a list of those expense items and what spend categories they're connected to. So I know we've talked about this a lot, but our spend categories were built off of the United Nations Standard Products and Services Code. And we also reference this as UNSPEC. And what this allows us to do, it really allows us to identify what we're buying and not why we're buying something. So in order to determine the why, sometimes we use other work tags, and that you can also capture on the internal memo of the requisition if you wanted to capture the business purpose. But I know this has been a big change, and we get a lot of questions of how do we know what spend category, if I'm purchasing, let's say, paper, what that's going to go into. And it's really based on where it sits within UNSPEC. There is a spend category that was created. It's the SC 99999 that people can use. So when you're purchasing something from a catalog and you select that item, the spend category is going to default for you. But when you have a non-catalog requisition you're creating, if you're unsure of the spend category that you should be selecting, if you put this special request spend category 99999 on there, it's going to route for someone to take a look at that to make sure that the spend category, to change it to the correct spend category. So there is training. It's create and approve a requisition to purchase goods and services. So if you guys take a look at that, it will talk about this spend category and how you create those requisitions. It is important to know that certain spend categories do drive additional approvals. And we just have some examples here for you. So there's some university IT categories. So if you have a cost center category approver, they might be asked to approve, IT type purchases. And then we have spend category approvals for very specific spend categories. So, radioactive chemicals, vehicles, weapons, things like that might have to go for additional approval. And then some spend categories require routing to the SPO. So an example would be office supplies or building and structures. And then based on some things like certain requisition types, the dollar amounts, and the spend category that's used, it might require a questionnaire that needs to be completed. So here's an example: requisitions greater than 25,000 or a bundled equipment, those would require that additional questionnaire. So now we're just going to really look at the unspec structure. And I know, several units I've met with, we could take 30 minutes to go over this in more detail, but we're really trying to give you just a high level understanding of the unspec levels. There's really 4 primary levels that our spend categories are used or based off of. The first level is segment. This is typically a really high level. So the example we have here is a segment in unspec might be office equipment, accessories, and supplies. Then underneath that, we have the family level, and it might just be office supplies. And then we have the class. So we're getting more and more granular here. Our class here is ink and lead refills. And then we get down to the commodity, and our commodity is ink refills. So if you were wondering where ink refills go when you purchase them, you can see here ink refills are part of the office supplies, not paper spend category. Most of the spend categories are built from the segment and family level. There are instances, and it might be some of those special approval ones we just talked about, that did require us to go to a lower level like class or commodity. There is additional training material being created around unspec, so you guys will get more information on that. But you actually can use that spend category FDM values report, and there is a column in there that does reference unspec codes to be able to see that connection. But we just wanted to kind of give you an example. We don't expect everyone to know the unspec table, but this is how we would be able to find out if you're purchasing something, what spend category that item actually falls in. And this structure really allows procurement to be able to do a lot of analysis on what we're purchasing, and it works across all companies and even comparing us to other institutions or companies.
So Tiffany, we have a couple questions, so maybe we'll just take a quick pause here. Can you clarify who will the SC 9999 route to for determination of spend category? So the cost center on special requests, so something that's not purchased through Buckeye Buy through the marketplace, those will go through both the cost center manager and the service center, and both of those steps can adjust the spend category. The responsibility would definitely be on the service center to double check that and make sure that looks like an appropriate spend category. Looking down here, will there be a work list at the department college level where purchases, travel, personnel allocations stop first for review or approval, or will what the initiator submits go directly to the service center or so? Good question, Valerie. Everything in terms of major transactions, and we can certainly send out a link to this, but major transactions such as purchase requests, travel requests, changing in personnel allocations will go through the cost center manager first for approvals. And in some of those, on the purchase request side and the travel side, the cost center manager can adjust the actual work tags on the transaction. What is the name of the Buckeye Learn training approving requisitions? I can't find that one. Jamie, maybe we can look that up and put that, or Eileen, put that in the chat for everybody, or we can, again, certainly can send that out after. Roger, will we be entering the unspec, or is that linked to the spend category? So back to Tiffany's slide there, the unspec will drive the spend category, and the unspec will come directly from items that are in the marketplace. The unspec will actually be on that item and will come through from that perspective. So in general, the user is not entering the unspec. The unspec is coming from the actual item. Hopefully that helps. I don't know, Tiffany, if there's anything else you want to clarify on that.
Yep, nope, that's correct.
Right. Who will be matching the expense item to the spend category? That's all done through the system setup. Is that correct, Tiffany and Robin?
Yes, that's correct. It's all set up in the system, so it's already determined.
Yep. So from an approval perspective, we need to look for and adjust any SC 999 as CCMs prior to approving. Rachel, that's a good question. The cost center manager can certainly adjust that, but I do believe that primary function or responsibility is going to be on the service centers to confirm that. We can go back and double check. I don't know, Eileen, if you know offhand what we've said in the training, but we can go back and double check that.
That was my understanding as well, Holly, that it would be the service center that would be looking at that.
Okay, perfect. Okay, and then how does unspec coding happen with P-card purchases? I don't believe unspec is on there. It's the expense item is used instead. Is that correct, Robin? Or
yeah, that's correct, Holly. Yep. So unspec is more for the procurement side. We just happen to have expense items that are tied to spend categories that are on the procurement side tied to unspec.
Okay.
But P cards run through the expenses.
Correct.
It's a Workday.
Correct.
Yeah, they're not using the unspec coding. Yeah.
Correct.
Yeah, so the unspec is tied to any items, so that they would also be applicable to inventory items. We can certainly get a little more clarification on that. Desiree. And Lisa put in a comment here too. The cost center manager needs to review and allow and adjust as not all transactions flow to the service center. Correct. All the special requests will go through the service center, but yes, we would obviously want the cost center manager then to review and adjust to the spend category.
Yeah, and they have a special rule written on that SC 9999 to get it to route.
Yeah, so there's a lot of questions here, and we don't have somebody on here with us right now from supply chain, so we can get a little more clarification here around unspec and responsibilities of the CCM and service center. So let me take that as a to-do to make sure we get a little more info back out to everybody on that. Okay, go ahead, and Tiffany, let me let you wrap up on this slide.
Perfect. So we just wanted to bring awareness to the group that there are some work tags that are commonly used within business processes that weren't really covered during the FDM training because we really focused on the chart filled replacement work tags. But there are work tags within each business process that can be selected on transactions. So what we're going to do is we're going to go ahead and pull some of these, and that's what we see here. So expenditure treatment, CSI code, grant treatment, prevailing wage, project phase, and expense item. We're going to go ahead and pull those into the FDM reference guides and definitions. So we are currently working on getting approval on the definitions of each of these work tags, but you will see something very similar to the definitions we've already provided. And in this quick reference guide, it talks about the ID naming convention and a brief definition. All of these work tags are going to get included into those documents. We also are providing a custom validation job aid. So while we went over some of the big items and a lot of the ones we get questions about, there are different nuances or custom validations that are written that might drive a requirement for another work tag. And one that I can think about is anytime you select restaurants, catering, and meals spend category, it is going to require that you put in an area work tag to identify whether those meals are for internal or external people. So as you can imagine, it'd be a lot to list out everything, but we wanted to make sure you guys have the tools and resources to find that information. So we provided that custom validation link.
Perfect. Thank you, Tiffany. And we will send this deck out either later today or tomorrow, and we'll post it too. So you'll have all these, you'll definitely have all of these links that are in here. And that's great. Lisa Plaga posted more clarification. The cost center manager is responsible for viewing accuracy of all FDM. The service center will validate and have ultimate oversight on determination of accuracy of unspec, spend cat, and expense item. So thank you, Lisa. And again, we'll get a little more clarity on the unspec usage on the non-catalog items. We'll definitely get back to you on that. So I'm just trying to look at a few more questions here before we move on to the next topic. So is the work tag for the different spend category hierarchies an option that the units select? I don't know if I'm understanding that. Tiffany, does that make sense? Maybe we need more clarity on that question. I'm not sure. We can get, maybe you can email or enter a little more info on that one.
Yeah, I'm not sure that I understand that.
Sorry about that, my dog. So maybe, Jimmy, could you take her and look at the rest? I gotta get my dog here, sorry.
Yeah, I think the training, Julie, I'm kind of seeing messages, comments going. Eileen, I think she's referencing on the spend category slide, the procurement team provided an ARC document that says create and approve a requisition to purchase goods and services.
Yes, I'm going to put that link back in the chat.
Okay.
Yes, we'll definitely send out the recording. Oh, okay. And then, sorry, one more. Meant to say that the system will not select the hierarchies, and that is a manual selection.
So you can't select hierarchies on transactions. You select the spend category actually goes on there. You cannot select hierarchies. If you're referring to cost of sales where the hierarchies are used to determine the overhead calculation, that's the spend category report is what you can use to determine all the spend categories that fall, within services and supplies and fuel additives. But you do not select hierarchies on transactions.
Yeah, they're really just used for reporting purposes. Okay, perfect. And Eileen posted the job aid, so I think we're probably good in this area because I want to make sure we give about an hour for the other topic. So appreciate Tiffany walking through all that with us. I think we can move on to the next topic. So I think Christina Renner, you're going to kick it off.
Yes, good morning, everyone. Hi, I'm Christina Renner. I'm from the College of Engineering. And we also go ahead.
Yep. And I'm Christina Cardenas. I work with payroll, accounting, and commitments. And one thing we just wanted to say before we get into this section of what we're talking about today, if you are an OSU health system cost center manager, you probably are not doing release from duty, so you do not need to stay. Feel free to stay if you'd like to, but this process is probably not something that applies to you. So just to kind of, level set, so you're not sitting on a call that might not apply to you. And then also, if your college does not sweep funds out of where faculty are normally funded and move them to another location, this presentation probably would also not apply to you. That's it. Great. We can get started.
Thanks. All right, what is release from duty? Release from duty is the mechanism for releasing employees, typically faculty, from their regular department position that includes teaching, so they can work on sponsored projects. The faculty member determines the percentage of effort and the length of time that they'll be working on the grant based on their sponsored project budget, and then they inform their department so their costing allocation can be updated to reflect the change. The faculty member still receives the same pay amount, but the costing allocation appropriately shows their effort on the sponsored project. Most departments have created their own internal policy on release from duty to encourage faculty to perform research. The department policy usually involves the distribution of funds back to the faculty's account or a percentage of the funds generated from the release from duty. In the past, when release time was processed in PeopleSoft, the account code 6010X was used to signify release time on a project on the employee's job earnings distribution row. In Workday, we're recommending that you use the activity and event work tag AE101147, grant effort normally department funded, wherever you would have used the 6010X account code. Fund 017000 is replaced with FD100 General Fund plus Program PG 100-410 Salary Recovery Reimbursement. Fund 590000 is replaced with FD520 Grants and Contracts Sponsored Program Fund. The sponsored project number is replaced with the grant number. If you have discovery themed faculty, you should not use the activity and event work tag on those grant lines, which is the equivalent to directly appointing them to the grant. If your cost center is currently using an expenditure treatment, you can continue to include that work tag on the grant line costing allocation. The reason to include the expenditure treatment on grant lines for budget-backed employees is to allow users to run reports on potential expenses for budget-backed employees, regardless of how they are funded at a specific moment in time. When creating the costing allocation for release from duty, it's important that the employees released from duty during the grant begin and end dates. The department is responsible for adding and removing the activity and event work tag from the costing line and removing the employee off the grant for off-duty periods by the payroll deadline. It's important to include the release from duty end date on the costing line so the right amount of encumbrance is on the grant. 9-month faculty should only be on release from duty from August 15th through May 14th, since summer months are not expensed to the department. If an error is made on the costing allocation and the percentage of effort or the grant number is entered incorrectly, the department is responsible for correcting the error with a payroll accounting adjustment. The budget to fund a faculty employee's salary and benefits is typically in the general fund. When the faculty member requests release from duty, a percentage of their salary and benefits is charged to the grant, which frees up that percentage of funding that would have been charged to the general fund. Since that percentage of salary and benefits remains in the general fund, you may want to move the funding to the Salary Recovery Reimbursement Program. If you typically have the savings from release from duty earmarked to return to faculty or other expenses, we recommend moving that funding to the Salary Recovery Reimbursement Program in order to properly show an accurate balance in the general fund. For example, a 9-month faculty member makes $100,000 in salary plus benefits and requests a 10% release from duty for the 9-month academic year. The full $100,000 salary and benefits is already budgeted in the general fund. 100,000 times 10% is 10,000 in salary. If we do not process a funds transfer to move the 10,000 in salary plus benefits out of the general fund, the balance is overstated in the general fund. As a result, we're recommending that you process a monthly funds transfer journal to properly account for this transfer of funds from the general fund or wherever your employee is typically funded by budget to the general fund plus Salary Recovery Reimbursement Program. And this will be shown in our first step of our process. I'm going to be demonstrating how to do this, but when we send out the slides, we're going to have screenshots of what I'm doing here so that you can reference it. And we're also working on a job aid so that it will guide you through the process.
And then one more thing, Christina, before you get started on the demo, we just want to make sure it's clear, like if your department does not want to sweep the funds, you do not need to sweep the funds. This is really just the process if it's that you should take if it's something that you do on a normal basis.
Thanks. Okay, for this presentation, I will not be showing you step-by-step how to complete a funds transfer. We highly recommend completing the journal entries training course to become more familiar with how to process journals if you haven't already taken it. So for our first step, we recommend that you run the sources and uses variance analysis report by your cost center number. So we'll type in our cost center number. And you would run it for the period of adjustment and for the current year time period. So we're actually going to go back in time and go back to August. We're going to X out the current period year to date and just put current period. It's important to include in the work tags the FD 520 Grants and Contract Sponsored Program Fund and your activity and event AE 101147, so that we only pull back information for employees with release from duty. So we are ready to hit OK. Sorry, everyone, it's taking its good old time. Okay. So this first step is an optional step. And our optional step would be to click on the uses and then filter by ledger account. And we'd be filtering by ledger account to ensure all ledger accounts are valid. If there are ledger accounts listed other than 9 and 12-month faculty-based salaries and benefits, this could indicate that the activity and events work tag was incorrectly used on those funding lines, and you may need to further investigate if that's an error. So this is just an optional step. Our first step of our process is to next click on the uses, and we're going to drill into the salaries and benefits by worker. We're going to add a second filter by ledger account, and then select refresh. Now we have every person who had release from duty listed in their funding and is included with their total expense in salaries and benefits for the period that we selected in our prompt, and we had used August. We recommend exporting the file or saving this file so that you can use it to prepare the transfer in your next step. And you can export it. One workday win is that you no longer have to calculate the fringe benefits associated with the release from duty. So that is a big time saver. We've got our file here. Workday does it for you. Also, you no longer move funding from Fund 017002 back to Fund 017000 monthly because 9-month faculty are already charged at the 9-month rate in Workday, which cuts your journal lines in half. So we have all of our information. So now we're ready to process our journal. And I already completed our journal to save us some time, but I want to show it to you.
And Christina, before you move to the journal, Rachel has a question about the process for 017,000 that OSP processed the chargeback. So Rachel, I just want to confirm, Christina just answered the question when she said that because 9-month faculty charge at the 9-month rate, you no longer have that journal process that puts money into 017,002, was it, Christina?
That's correct. Yes,
Yeah,
we no longer have to do that.
Right.
Yay, save a step.
Yep.
Workday win.
Yay.
Yay. All right, so now it is time to create your funds transfer journal to debit funding from the location where your employees are funded from on their costing allocation, which is typically FD 100 general funds. And we're going to be crediting the general fund plus salary recovery reimbursement for the salaries and benefits. So here's my funds transfer journal. And if you remember from our amounts over here, we had all of our faculty, their salary, 19,617, and their benefits, 4,590. And we are debiting, we're transferring out from our general fund. We're recommending that you use the spend and revenue categories for department research support. And you're moving that 19,617 and crediting the FD 100 plus the salary recovery reimbursement. When we did that for our salary and our benefits for the month of August. Of course, you could combine both of these if you wanted to. You could add additional details in the memo, but you can see that we've moved the money based on the information from our report, moving it out of our general fund and moving it to the general fund plus the program. Okay, so now we are going to remember also that you can copy this journal monthly and just update the debits and credits with the new value. So if you've got this already built, you can just have it ready to go, race out debits and credits, change the month, and it's easy breezy. So we are ready for our next step. The second funds transfer journal to be completed is for the return of the release from duty savings back to the faculty assignee Worktag value. Most departments have created their own internal policy on release from duty to encourage faculty to perform research. Since faculty who are on release from duty results in savings to the department policy usually involves a distribution of funds back to the faculty's assignee account for a percentage of the funds generated from the release from duty, and the department keeps the rest of the funds. If your department does not return any of the release from duty savings back to the faculty member, then you would not complete this step. In engineering, we want stability in the numbers before transferring the funding back to the faculty. If you transfer the funds back to the faculty monthly based on your department policy, there could be changes with payroll accounting adjustments that could impact the amount that would be distributed to the faculty member, and you may have to take back money that you've already distributed. For that reason, we're recommending processing this funds transfer once a year. So in this step, we're going to be running the sources and uses variance analysis again, but this time we're going to be running it as of June and updating the current year time period to be current period year to date. We'll go back in and add our cost center. Oops, helps if I spell it right. And for our period, we're going to make it June 2021. And we're going to keep it current period year to date. Just leave that as it is. Remember that we need to add our work tags, FD 520, and we need to add our activity and event 101147. So now we're ready to go. This is the journal that we'd be completing at the end of the year. Okay, so next we're going to be clicking on the uses to drill into the salaries and benefits by worker. And then we're going to add our second filter of ledger account and then hit refresh. So now we have every person who had release from duty listed in their funding that is included with their total expense of salary and benefits for the year to date. Now we're going to export this file into Excel, and you would click here. I've already exported our file into Excel, so I'll bring it up. And this is where, using your department's release from duty policy, you would calculate the total dollar amount that should be transferred to each faculty assignee work tag for the release from duty for the year to date. So in our example, we're saying that the department says that they give back 20% of the salary back to the faculty member. Your department could have a different policy, and this is where you would implement your department's policy. In ours, the department keeps all the benefits and then 80% of the salary. So we'll need these numbers to create our next journal. So now it is time to create our next funds transfer. I've already done it. Save us some time. All right, so now it's time to create the funds transfer journal to move funding from the general fund plus the salary recovery reimbursement program and moving it to the faculty assignee work tags based on your calculations. In our first demonstration, we processed a monthly transfer to move funding from the general fund to the general fund plus salary recovery reimbursement program. Now that we're at the end of the fiscal year and this transfer has happened monthly, the balance of the general fund plus salary recovery reimbursement program has grown. Based on your department release from duty policy, it's now time to move that percentage of funding back to the faculty assignee work tags. So here's our funds transfer journal. Remember, here are our calculations for our department that we've decided we're going to give back $17,961 back to our faculty members. See, a not Agarwal is supposed to get $970. So let's take a look at that. So here's our first row where we are transferring out $17,961. And we are transferring that out from our general fund plus the salary recovery reimbursement. Remember, that was our step in our first one where we were moving money from general fund and moving it to general fund plus salary recovery reimbursement. That balance has grown. And now we are sending each faculty member their portion based on our department policy and putting it back in their account. So here's the $970 that we saw over here for Anant Agarwal. And we are going to move that to his general fund, salary recovery reimbursement, and here's his assignee. We are still recommending that you use these department research support and department research support transfer in, spend, and revenue categories. And so you would do this for each of your faculty and add their assignee with their dollar amount. I guess our next step we want to show you, so you have all of these, and in preparation of your journal, you would need to look all of these up, which we're going to show you a faster way, but you could also look these up when you're preparing your journal and just search like I had done with the cost center and type in the person's name. We want to show you an optional step of looking these up quickly. So we are recommending that you'd run the custom organizations FDM values report. And then you could click right here and pick assignee and hit OK. Now this has pulled up all the assignees in the university, but you could quickly sort for your faculty. And now with large journals, you would have to look all these up. You could have these quickly at your fingertips.
So the recommendation would be
just a
that,
recommendation.
Yeah, like it would be like that you might want to have like this set up already so you don't have to do this exercise every time, you know, maybe you have a quick name and assignee ID like as a cheat sheet for your own unit. it doesn't happen that frequently for some colleges that are doing it annually. I know Arts and Sciences does it 2 times or 3 times a year. So you could look it up every time, but it might be easier to just have a baseline cheat sheet ready.
Yes. The other thing that we
wait,
wanted
Christina,
to
I'm sorry,
show
one
you-
question that came
yes.
up. And this might need Tiffany because I'm not sure. Are assignee values only for faculty?
No, so you could have faculty, staff, student, depends on what you need to track, but you can track anything you need to track by an individual could go into an assignee. We have physicians as well, so it might not just be for faculty. But it has to be requested for the unit for it to be an assignee. There's no automation.
Thanks. We wanted to show you one other idea. Pull it up here. Depending on the size of your department and the number of lines in your journal, you may want to use the EIB template to upload your data into Workday. Remember to go to the Administrative Resource Center to download the most current EIB template and the step-by-step instructions. Of course, you can always manually type in your information into the funds transfer journal. That's easier for you. But we thought if you have a large journal, you can quickly put, your ledger accounts, your amounts, your cost center, you can see your assignees. And so this could be a little bit faster choice, but of course you could always manually type it in, but we wanted to provide this suggestion to you. We did want to show you one other thing. If you want to determine which grants a particular faculty member has worked on for release from duty for the year to date, again, we're recommending that you run the sources and uses variance analysis. We're going to put in our cost center again. For the period, we're going to go to June. We're going to leave it as current period year to date, and we're going to again add our work tags, FD 520 and AE 101147. Okay, and then next we would click on the uses to drill into the salary and benefits by worker. And then you would click on these individual lines and then filter by grant. So you can click here and now click grant. And now you can see that, pull this over so you can see it. Well, it's not letting me see it.
Click on the little 3 dots, the 6 dots
like
in the middle
stuck.
to pick it up and move it.
Okay, thank
Christina.
you.
There you go.
There we go. Okay, sorry, folks.
Workday hack.
So you can see Anat Agarwal 5982, and you can see these were all the grants that made up that amount. So if you're wondering where did this all come from, you can quickly see this. And remember that if you want to see all the lines associated with the total release from duty by grant for the fiscal year, you can click on these blue links and all the journal lines will come open. So that is our presentation. We are here to answer any questions that you had. Were there any questions in the chat, Christina?
There were some questions in the chat that we kind of answered as we went through. There's some questions about, there's still going to be OSP overruns that happen. And so we were asked to kind of get the chart, the work tag string that where those would be charged back to. So we have that as a takeaway. And I see Michael DeWeese made some comments about how it works, but we'll make sure that to get it like in an email and sent out when we send out the presentation notes.
Christina,
yeah,
there are a few additional details and I will share those so that we can put them out with the notes.
Awesome. Yeah. So we'll send that out with the notes. And then we had a question about benefits and if benefits are automatically calculated for 12-month faculty. And yes, benefits will be automatically calculated every pay period for everybody. It happens real time. And it also happens as soon as you do a correcting entry. So like a PAA or the DRD replacement, the benefits also calculate as soon as that journal posts to the GL. That was another question we got. We already answered the assignee question. We did get a question about the EIB template and that, you know, it's recommended that it's downloaded and that a new version is downloaded every time you want to run it. But they had a question about how often that would change. And I think we'll probably have to get you that answer because we'll need somebody from financial accounting, unless Holly or Lisa has a direction on that.
I think we can follow up on that too, Christina.
Okay. Perfect. If we need additional assignees that other than what is like showing up in the list, we would have to request these. Where do these requests get sent? So that's a Tiffany question.
Yep, so you'll use a request framework and maybe we can send out the link because there is a reference guide for that, but they do get sent to the controller's office to be set up.
Great.
And they'll route, you actually send the request directly in Workday and it's automatic routing, but we'll make sure you guys have the link to that.
Great. And then how can we get a copy of the job aids for the release from duty presentation we just saw? We will be working on those. We wanted to do the presentation first, and we will send out the presentation, but we might also we're going to put it in a little bit more of a digestible format as well. So that will also be put out on the ARC when it's ready. And then Dan asked, is there a report where we can get a list of college personnel that are appointed to projects that are ending or close to ending? There is a report out there, and we'll try to get at least some guidelines around that. I think that's something I'd love to do, like a highlight on how to run that type of report, because I do think it's important for everyone to start looking at people who might be on expired grants. So I'll have that in my back pocket, Dan, for making sure we get something out. Is there a demo that shows the perspective of cost centers, like research centers, that are funded through off-duty pay and or charged pay for faculty serving in administrative leadership roles? We typically coordinate with our college's fiscal officers, and they typically are in the lead on this. I'm uncertain as to if how Workday will change our relationship with the college. I might need to get back with you, Erin, just to kind of make sure I understand your question. It seems like I'm sure I don't know that we would have to change how you interact. I think it's probably similar, but I just want to make sure we understand your question. Lots of questions. Curious about the extra step to look up the assignee values. Can't you just search the assignee in the additional work tags column while entering the transfer journal? And you can, right, Christina?
And you can, but I think there's a little bit of a delay. And then you sometimes, especially if, there's lots of Jane Does, then, it's a little bit easier, I thought, to look it up the other way. But of course, you can search for it that way. When I was building my journal for the presentation, I really liked the other way because it was really slow that way. But that was just, personal choice. Good question. All right. Well, I think I will send it back to Holly then.
Yep.
There's no further questions. Thank you.
Thank you, Christina. And Christina, that was a record in getting through those materials. That's great. Okay, so we will definitely follow up on those items that came up that we said we'd get back to you on. And again, we will definitely send out these materials. I did want to acknowledge Michael DeWeese. I saw your comment on the Q&A, and I'll reply back. We can reply back to that on a response back from this session. But there is period close training out on Buckeye Learn. So if you haven't taken that or others haven't taken that, that does have guidance in there about period close analysis and reporting, and also the controller's office is working on some guidance too in more of like a job aid format. So more to follow on that topic. Okay, so just a couple of other updates while we have everyone here. please make sure you continue to go out and use our enterprise project website. I know a lot of you have been out there. We have the calendars out there with all of our cutover freeze dates. We're also sending those ones that are coming up, key ones coming up through NewsLink. And I would assume most of you are getting those because you're probably PeopleSoft users today. So again, make sure you're checking out our website. We also have a lot of stuff on the Enterprise Project website about training. So again, a really good resource if you're getting questions about training and to send your users to if they're asking you questions. Again, a reminder that all of our cost center manager meetings have been recorded, and this is a link. These are all links. We'll definitely send this out. And just if you haven't, if you missed some of those, might be good to just kind of go back and relook at those as a refresher if you have time. And finally, something really exciting, we do have a new course offering called Workday HR and Payroll for Fiscal Staff. So even if you weren't assigned that, we encourage you to go out and look for that and out in Buckeye Learn and to take that class. I think that will be really helpful for most people on this call. Okay, I think that is all I had for general updates. Any other questions? Thank you, Marie, for that. Questions? Please repeat the title of the monthly close training. I think it is called Period Close. And I can make sure we send out the exact name after this, Jim. Okay, so I think we're good to go. Those are just, sorry, kind of confusing because there's some different things. Yeah, so I will definitely send out the exact name of that training. Okay, great. Well, thank you everybody so much for attending. We appreciate that. And we're almost there. So thank you for doing everything you are to support this effort. And we're close to the finish line now. Thank you. And thanks to all of our presenters.